Treasury to Tokenization, 5 e-commerce finance stories to watch August 10, 2026. Disclaimer, news only. Not legal, financial, medical, or official advice. These anecdotal reports are for informational and entertainment purposes only. Story 1. Corporate Treasury and Cash Flow Management. AI Treasury agents become the new CFO co-pilot for global e-commerce. Clickbait headline: The Treasury revolution nobody saw coming is quietly eliminating cash blind spots. Heading into August 10, 2026, one of the most significant developments affecting e-commerce companies is the rapid deployment of AI-powered Treasury automation. Treasury teams are increasingly adopting platforms capable of monitoring cash positions across multiple banking relationships in real time while generating predictive liquidity forecasts and automated risk alerts. Industry reporting throughout recent weeks shows financial institutions and Treasury technology vendors racing to launch autonomous Treasury assistants that can perform liquidity analysis, identify working capital bottlenecks, and prepare cash forecasts before executives even begin their day. These systems are particularly attractive to online merchants operating globally because inventory purchases, ad spending, fulfillment costs, and cross-border payments can fluctuate dramatically. With interest rates, currency volatility, and geopolitical uncertainty remaining relevant considerations, Treasury software is evolving from a reporting tool into a decision support platform. Analysts increasingly view Treasury intelligence as a competitive advantage rather than simply a back-office function. The broader implication is that future digital commerce enterprises may manage liquidity with near-continuous AI oversight rather than periodic human review. Treasury Management. +1. Legal subtopic. Corporate counsel are focusing on governance frameworks surrounding AI-generated Treasury recommendations. Directors increasingly want documented approval workflows and audit trails to demonstrate prudence and fiduciary oversight when automated systems influence financial decisions. Story 2. Enterprise Risk Management, ERM. Cyber risk moves permanently into the boardroom. Clickbait headline: Why every e-commerce board is suddenly treating cybersecurity like a balance sheet asset. Enterprise risk management continues to undergo a structural transformation as cyber resilience becomes one of the most heavily scrutinized areas within corporate governance. Recent reports from risk consultants, security analysts, and governance specialists indicate that organizations are shifting away from viewing cybersecurity as a technology issue and increasingly treating it as an enterprise-wide financial risk. The widespread adoption of AI tools, third-party software integrations, cloud infrastructure, and automated workflows has expanded digital attack surfaces across the e-commerce economy. Boards are demanding quantitative risk measurements that translate cyber incidents into possible financial outcomes, regulatory penalties, operational disruptions, and reputational damage. Simultaneously, regulators across multiple jurisdictions continue raising expectations regarding disclosure, resilience planning, and accountability. The emerging consensus is that risk management programs must become predictive rather than reactive. Companies that successfully integrate cyber risk, operational risk, and business continuity planning may gain greater investor confidence and a stronger competitive position during periods of market turbulence. +2. Legal subtopic. Legal teams are closely monitoring expanding executive liability standards. Emerging regulations increasingly expect boards and senior officers to demonstrate active oversight of cyber resilience programs and documented incident response readiness. Story 3. B2B Payments and Infrastructure FinTech. Stablecoins graduate from experiment to enterprise infrastructure. Clickbait headline: The multi-trillion-dollar payment rail quietly challenging traditional banking. One of the most consequential fintech developments affecting e-commerce supply chains is the institutional adoption of regulated stablecoin settlement infrastructure. Over the last year, payment networks, fintech platforms, banking providers, and corporate treasury departments have expanded their interest in blockchain-based settlement mechanisms as a means of accelerating commercial payments. Rather than viewing stablecoins as speculative assets, Enterprises increasingly evaluate them as operational infrastructure capable of reducing settlement times from days to minutes while improving visibility into cross-border transfers. Industry experts note that supplier payments, treasury transfers, contractor compensation, and international marketplace settlements are among the strongest commercial use cases. Regulatory clarity in major jurisdictions is helping remove barriers that previously prevented adoption by larger institutions. For e-commerce merchants operating across continents, the ability to move funds continuously without banking hour constraints represents a potentially transformative efficiency gain. The trend also aligns with broader efforts to modernize global commerce infrastructure through programmable financial networks and automated settlement systems. Pay future. +2. Legal subtopic. Law firms specializing in payments regulation are increasingly advising clients on stablecoin compliance obligations, sanctions screening requirements, custody arrangements, transaction monitoring standards, and cross-border reporting responsibilities. Story 4. RegTech, Regulatory Technology. Agentic compliance platforms redefine regulatory operations. Clickbait headline: The era of always-on compliance may already be here. RegTech is rapidly evolving from basic automation toward intelligent compliance infrastructure capable of operating continuously across complex regulatory environments. Financial institutions, payment providers, digital marketplaces, and e-commerce platforms face growing volumes of regulatory obligations related to anti-money laundering controls, sanctions screening, transaction monitoring, operational resilience, consumer protection, and AI governance. The newest generation of compliance technology is being designed to monitor regulatory changes, extract requirements, generate audit trails, and prioritize risk signals with substantially less manual effort. Industry observers increasingly describe 2026 as the year when compliance shifted from retrospective review toward real-time execution. Regulatory expectations remain intense, but advances in machine learning, explainable AI, and workflow orchestration are improving institutions' ability to respond quickly. Many compliance leaders view the convergence of AI and regulation not as a burden, but as an opportunity to create more transparent, scalable, and resilient operating models. Long-term, compliance may increasingly resemble a continuously operating digital infrastructure layer supporting commerce across borders and industries. RegTech Post. +2. Legal subtopic. Legal departments are preparing for heightened AI oversight requirements involving explainability, transparency, model governance, record retention, and supervisory review obligations linked to automated compliance systems. Story 5. Institutional trading and market infrastructure. Tokenization accelerates the rebuilding of financial market plumbing. Clickbait headline: The market infrastructure upgrade that could compress settlement from days to seconds. Institutional finance continues moving toward a future where tokenized assets, digital settlement mechanisms, and programmable financial instruments play a growing role in market infrastructure. Throughout 2026, large financial institutions have intensified efforts involving tokenized money market funds, tokenized treasuries, digital collateral systems, and blockchain-enabled settlement workflows. Supporters argue that tokenization can improve transparency, reduce operational friction, enhance collateral efficiency, and support around-the-clock market activity. Major discussions increasingly focus on how these systems can coexist with traditional exchanges, clearinghouses, custodians, and regulatory frameworks rather than replacing them entirely. The developing vision is one of hybrid infrastructure where established institutions provide governance, oversight, and legal certainty, while blockchain systems provide efficiency and programmability. For e-commerce and fintech ecosystems, the implications extend beyond capital markets because the same infrastructure principles influence payments, treasury management, liquidity distribution, and cross-border commerce. Many futurists see tokenization as an early building block for a more connected financial architecture supporting a highly digital global economy. Blockchain Council. +2. Legal subtopic. Attorneys specializing in financial regulation are concentrating on questions involving legal finality, ownership rights, custody standards, securities classification, disclosure obligations, and cross-border enforceability of tokenized assets. Video description. Dive into the 5 biggest financial infrastructure stories shaping digital commerce on August 10, 2026. From AI Treasury agents and cyber risk governance to stablecoin payment rails, autonomous compliance technology, and institutional tokenization, this episode explores how the next generation of financial systems is transforming business, markets, and e-commerce. We examine emerging legal issues, regulatory developments, and the long-term implications for investors, corporations, technology leaders, and entrepreneurs. Featuring a forward-looking perspective grounded in current industry developments with a hopeful vision of innovation-driven economic growth. Video tags. Hashtag corporate treasury, hashtag cash management, hashtag treasury tech, hashtag enterprise risk, hashtag cyber risk, hashtag ERM, hashtag B2B payments, hashtag fintech, hashtag stablecoins, hashtag cross-border payments, hashtag regtech. Hashtag compliance, hashtag AI compliance, hashtag institutional trading, hashtag market infrastructure, hashtag tokenization, hashtag digital assets, hashtag e-commerce news, hashtag financial technology, hashtag treasury management, hashtag risk management, hashtag blockchain finance, hashtag payments innovation, hashtag future of finance, hashtag digital economy, hashtag fintech news, hashtag capital markets, hashtag business news, hashtag innovation, hashtag economic trends. Base thumbnail. Text: 5 finance shifts changing e-commerce. Visuals: futuristic city skyline, digital globe, AI treasury dashboard, stablecoin token graphic, electronic trading exchange display, blue and gold color palette, upward growth arrows. Thumbnail A, B/C testing variants. Thumbnail A. Text: the dollar trillion payment shift. Visual: glowing stablecoin coin crossing a world map with payment rails. Thumbnail B. Text: AI now runs treasury. Visual: CFO silhouette facing a holographic AI command center filled with cash flow analytics. Thumbnail C. Text: Wall Street's new backbone. Visual: digital tokenized assets flowing through futuristic exchange infrastructure with bright market charts. Target runtime: approximately 10 to 15 minutes when read aloud at standard Microsoft Neural Voice speed.